I just had a two-part question. Henceforth, how much can you cut costs further, and will you go slow on your expansion plans because of the challenges?
So I think spend optimization is a part of our reset strategy. That's what the S stands for. I think for us especially, it's been a very good learning curve in terms of optimizing our spends because of the lockdown. If you look at it, the same quarter last year, we only tend to look at the revenues, which were, we have 17% of the revenue of last year, but the costs are down by 52%. So I think that is an eye-opener for all of us. And a part of it is definitely variable costs. But I think going forward, we will have a fixed cost reduction also to a very large extent, which was not that much easy to do in the first quarter. On the expansion part, I can only highlight that the 50 new agreements that we signed in the last 2 years are a part of our pipeline. A lot of them are in different phases of development. Some are built 50%, some are built 70%, some are even more than 90% ready. For example, our hotel in Delhi, the Connaught, should open in October. The hotel in Ahmedabad should open in October. So there is a lot of these properties which are waiting to open. And on the finishing part, we are witnessing a bit of delay. So if normally you needed 1 month to finish, now you might need 2 months to finish because the labor is not available to the extent it was available the pre-COVID times. As we all hear and read, a lot of workers have gone back home. And so there is a shortage of labor to finish the property. So there might be a marginal delay, but we are very much on track on opening hotels. More importantly, I think because you asked for the capex, we always feel as if we are still owning everything. We are not. We've become, very much on the asset light side of business when it comes to our pipeline. So we do own a lot of assets that are existing, which we will also look at monetization of one or the other non-core asset or brand enhancing location or locations that are in B or C class cities. However, the new inventory that is coming online, I don't think we own any property of that. So the capex is only related to renovations, upgradation, introducing new brands, and not to building new hotels. So I think we're actually very much looking forward to it because whatever fee income it adds as a service provider, it helps you in mitigating your downside on the revenue.
A quick last question. Actually, while you were speaking, we were showing pictures of how Taj sanitizes its hotels. Our colleague Kritika had done a feature, if you remember. Anyway, Puneet, just a final question and a quick one. Will you be taking advantage of the loan recast? And what relief might it give you if you did?
Sorry, I couldn't hear you.
The loan recast that RBI has allowed. Will you?
Yeah, no,
will
we
that
don't.
Ease?
We as Indian hotels don't stand to benefit from that, but definitely as the leader of the Hotel Association of India, as well as on the Tourism Committee of CII, we have been requesting the government to help out the sector and also on the moratoriums, in the fixed charges, in the licensing, and also the status of the sector. I think it's time that we are added to the concurrent list of the Constitution, that the tourism becomes a part of infrastructure at the center level and industry at various state levels. It's not easy because every state can decide on their own, but that's been really our drive. In the last 3-4 months as different associations in this industry. We continue to strive for it, and I think it will be the right thing for the nation to do it, and in line with the strategy outlined in promoting tourism and tourist destinations in India.
Okay, let's see if policy evolves to include tourism as infrastructure. That would certainly be a sensible thing to do. Thank you very much, Puneet Chhatwal, for joining us. Okay, that's the word from Indian hotels, and we haven't looked at the markets because when we were looking away, they were doing very well. So we thought we should continue. Anuj, this is a huge recovery.
This is, and I think the dip was provided because of that fresh US-China issue, and now, once again, it's been bought. But like I said in the morning, Lata, the focus today should be on the mid caps. The mid cap index is now up 1%. In fact, that's been the theme this week. The mid cap index has far outperformed the small cap index. Nifty Junior have outperformed the indices. We have Mitesh Thakkar and Prakash Kaba back with us. Mitesh, what would be your calls now at 10 a.m.?
Good morning, Anuj. I think you're rightly highlighting, I think, good recovery, and that does suggest that there's still that strong possibility of testing the upper end of the range around 11,300, and breakout above that could give another 150, 160 points on the upside. For the timing, I have a buy on Torrent Power with a stop at 340 for targets of 360, and Bosch is a buy. Keep a stop below 12,950, look for targets of 13,800.
Okay, by the way, look at the strength in some of the stocks. SRF is now up 3%. UPL is up 2.25%. TVS Motor, which has been a strong gainer. Century Textiles, Apollo Tires, all these stocks doing well. Prakash, what would be your calls at 10?
I have two calls here. Bajaj Finserv looks good to me. Very good chance. We can see it climb around 6,500 zones, stop below 6,280. I also like Power Finance. Possibly we'll see an move to around 90 zones, stop below 87. Looks like banks are holding up.
All right, gentlemen, thanks a lot for taking us through the trades. Yes, banks are holding up and making a comeback. But let's see, Sonia, we got a reference point for the day, which is the day's low. And if it gets respected, perhaps there could be one more round of buying. But mid caps doing well is clearly the theme.
Okay, Anuj, thanks a lot for that. True to its form, right? I mean, every dip is getting bought, similar to what we've seen since the start of the year. But let's focus on some more earnings now. It was a good showing from HPCL actually in the first quarter, as the gross refining margins were aided by inventory gains. M.K. Surana, the Chairman and Managing Director of HPCL, joins us now to discuss this and more. Mr. Surana, thanks for joining in. I want to first start by asking you what the fuel demand situation has been in July and so far in the month of August, because we haven't got the data yet. Has there been an improvement?
Good morning, Sonia. If you recollect, as of June, the demand has picked up to around 74% of the total April to June quarter the previous year. Means I'm talking the average of the quarter. As of June, it has picked up to around 91% of the previous year June. In July, the petrol demand is still is around 89% of July 2019. Diesel demand, which has picked up to 85% in June, has come down slightly lower to around 82.5%. And that is basically because the monsoon has started, and every year we see the trend that the July, once the monsoon starts, the diesel demand start reducing a little bit. Also because the agricultural sector, which have around 12% of the diesel demand, there the diesel demand starts reducing once the monsoon comes in. So structurally, still the demand is there. Overall, around 88% compared to July 2019. Petrol 89%, diesel around 82% of the July 2019 period. So reasonably good.
85 itself is good, though of course since you hit 90 in June, 85 looks like, you know, the lockdown is also, re-lockdown has taken its toll. Mr. Surana, good morning. Thank you very much. What about...
Yes, some parts... Yes, sir.
Yes, sir. What about spreads in the various products? I mean, how was it in the quarter gone by, and how has it been in the last 5 weeks of this quarter?
The cracks had been under pressure in the sense that the average MS crack for the quarter had been around $0.5. For HSD was around 3.1. It varied. The MS crack, it went as high as $4.99. It also went negative. HSD also, it went up to $9.5 also, and it came down negative also. So it varied. But because of the overhang of the surplus inventory of the products, which is still there in the market, there is a pressure on the product cracks, which is also having impact on the GRMs. So the Singapore GRMs for the quarter was negative $0.93. We have posted a positive GRM of around $0.04. Once the inventories which are there, the product inventories, the market gets little bit used up. I think from the third quarter, the GRM should look up. That's what we anticipate, assuming that the crude prices will continue to be in the range where.
Okay, all right. So, you were telling us about how demand is, fuel demand particularly, but I wanted to understand from the industrial segment, what kind of demand are you witnessing so far? Has there been any significant jump since the unlocking of the economy?
Yes, of course. After April, let's say 20th April onwards, the first unlocking started. And subsequent to that, we saw the uptake in the demand for lubricants. We saw demand on vitamin. Of course, vitamin demands does pick up before monsoon for road repairs, etc. And there was a demand for the non-transportation fuel segment, fuel oil, naphtha, lubricants, vitamin, etc. And HPCL could do well on those products. In fact, April to July lubricant sales in this year has already crossed the volume of April to July last year for HPCL.
Okay. Well, finally, sir, how's debt shaping up? Will you see a higher outgo in the current quarter, or will it reduce? I mean, interest rates have fallen, but the quantum of debt hasn't.
No, in fact, in HPCL, the quantum of debt has come down. In fact, as of March end, we had a debt of around 43,000 crores, which came down to around 36,000 crore as of June end, and has come down to around 31,000 crore as of July end.
Okay.
So it has reduced essentially from that point.
No, I'm sorry, I didn't see that number. But how will it be in the current quarters? Are subsidies flowing regularly because the government was out of pocket because of obviously tax shortfalls?
No, the subsidies which we are supposed to get from the government, basically for PDS kerosene and LPG and this PMGKY additional cylinders which were supposed to be given. So as of March end, we had outstanding of around 6,300 crore, which came down to around 4,700 crore as of July. So it is flowing.
Okay, we'll leave it at that, sir. Thank you very much indeed for joining us with your numbers, which of course has found a lot of celebration in the stock markets. We're going to take a quick break now. And thereafter, Prateek Aggarwal, the Chief Financial Officer at HCL Technologies, joins us. A whole host of mid-cap IT companies have done well, even large ones. So we're going to just ask him whether business has taken a leap forward.